Welcome back. The material we're looking at today covers the ONDS Holdings paradox, a massive 580% revenue jump, but the stock is falling hard.
Yeah, all driven by these fears of dilution from a proposed share increase.
Down 16%, but up 580%. It's a fascinating setup. All right, let's jump straight into the feedback.
Okay.
So the first thing that really jumped out at me is just the structure. The core conflict, this amazing growth versus the huge risk, it's all crammed into one single really dense paragraph.
Exactly. It forces the reader to do way too much work. You've kind of buried that high-risk, high-reward tension inside this wall of text.
Right.
And the fix here isn't just, moving a comma. It's more like structural surgery.
So splitting it up?
Yeah, completely. Deconstruct the core conflict. Create two distinct parts.
Okay.
For example, pull out all the good news into its own section. The revenue growth, that $23 million backlog, the Iron Drone win.
And then have a separate part for the fear narrative.
Precisely. The gap and fade, the share increase, the postponed meeting. Let the reader see the two sides of the coin instead of trying to find them in a pile.
That makes sense. Now, speaking of that postponed meeting, I found the connection there a little ambiguous. What's really driving the sell-off? Is it the delusion itself, or is it the uncertainty from the meeting being pushed back?
That's the key question. And the causal link needs to be much, much tighter.
Okay.
Right now, the reader is left guessing which is the primary catalyst. So the suggestion is to just be explicit.
Draw a clear arrow.
A much clearer arrow. You could state it directly, something like, the fear isn't just the potential dilution, but the added uncertainty from the November 25th postponement.
Or the other way around.
Or the other way, yeah. You could say the dilution proposal is the main driver and the delay just threw gasoline on the fire. Just make that cause and effect relationship impossible to miss.
Got it. Okay, my last point is about the conclusion. I love the inclusion of that $6 price threshold.
It's a great actionable detail.
But it's buried. It feels like the most critical piece of advice for an investor, and it's just tacked on at the very end.
It is, and its placement really diminishes its impact. You want that to be a headline, not a footnote.
So elevate it.
Elevate it, make it the star of the conclusion, frame the entire investment thesis around that technical level.
So you'd lead with it.
I would, yeah. Start the final takeaway by saying something like, crucially, the success of this discount thesis is conditional.
Ah, okay.
If the stock holds above $6 through this volatility, then long-term believers might see a path to $9 or $13. It gives the reader an immediate practical focus point.
This is a really strong piece of analysis. Just needs a bit of reshaping. So, to recap, we focused on restructuring that core paradox for clarity.
Right, splitting the good from the bad.
Then sharpening the link between the dilution fears and the market's reaction.
Making that causal arrow crystal clear.
And finally, elevating that actionable $6 threshold to give it the weight it deserves.
Exactly. If you make those structural changes, I think the impact will be so much greater. We definitely encourage you to send the revised version back in for another look.